Connection established.
Hey everyone, hope you're all doing well. Welcome back to the channel. Today is day 22 of the Millionaire Memecoin Mindset series. And in today's discussion, we will be talking about how needing to be right destroys traders, how the market doesn't owe you anything, how you should think in probabilities, and why you don't know what happens next and how you should trade that accordingly. Before we begin, if you do need a trading platform, sign up using the link in the bio and the comment section. It is the cheapest and best trading platform, and the link also gets you the cheapest discount off your trading fees. So let's begin. In today's video, I wanted to discuss how needing to be right for traders ends up actually fueling them to be wrong more. Because we have this hyperfixation and addiction to having a high win rate, high percentage of wins, right? Psychologically, we never want to be wrong, right? In school, when we're growing up, we're taught that being wrong is bad, right? You want to be right. You want to be smart. And likewise, the same thing with our parents, right? When we do something, they want us to be really good, smart. So you want to always be right. And you're punished when you're a little kid and you're growing up to be wrong. And what happens is in your head, you have this subconscious buildup of past experiences of where you've been wrong and had a negative connotation with it, right? Because say you get a 50 on a test when you were in third grade or second grade, your parents are going to punish you because you didn't study, you did bad, right? You failed the test. And so what happens is we carry these past experiences and bad experiences in our subconscious mind. And when we start trading, that actually gets reflected as well. And why is that? It's because trading rewards the most unoriginal minds. And what do I mean by that? You need to have a different mindset when you're trading as opposed to the normal individual. And that's why the normal individuals that start trading lose all their money, because they're still thinking in the programmed mindset that everyone has growing up through life, right? Oh, I can't be wrong. If I'm wrong, I'm punished. And so how is this exact example reflected in trading? Well, for example, let's say you take a trade, right? So you're doing support and resistance and we're in a support zone. You're like, okay, I'm going to buy here. And you see a little bit of red. Well, there's two options you could do. You could cut the loss, right? And accept you're wrong. Or you could be like, no, I'm right. It's going to go, right? And then it might go lower. And then you're going to say the same thing. I can't accept I'm wrong, right? I can't accept the loss. I'm not wrong, right? Being wrong is bad. I can't do that. I need to be right. And so that kind of mentality and mindset that we're being pushed on since a young kid actually gets permeated into our trading style and skill set. So needing to be right destroys traders because you don't need to be right. Yes, a high win rate is great for the beginners because it gives you a confirmation bias that you're doing things right and you're making profits. However, the better, more advanced traders and the better you get have a lower win rate because they're more tolerant to risk. They're able to accept more risk because they know, hey, I'm going to need to be wrong a lot of times in order to be right. And so you have to develop that mindset that needing to be right all the time is bad because there are going to be opportunities and times where you're not going to be right and you need to accept that. And with our past conditioning in our younger years of development, that's a bad thing, right? Oh, you're wrong. Someone said in school, you're wrong. You'd get angry or your parents would be like, oh, you failed the test, etc. And so we need to reshape and rethink our trading mindset because that mindset is not fruitful in trading, needing to be right all the time. Because there's a difference between taking a trade and losing, say, $100,000 on a perps trade and taking a trade and being down 20,000, but knowing, hey, the market does not look good for my long. Let me just get out. Let me take the 20K loss. As opposed to being in that trade, you're down 20K, but you're like, no, I'm going to come back, right? I know I'm right. And then it goes and you lose the 100K. So you need to accept losses sometimes on the chin and know you're wrong. Like, hey, I'm wrong. And that's okay. I'd rather be wrong and lose less money than try and be right and lose a lot more money. It's okay to accept when you're wrong. That's how you limit your losses, or at least lessen the blow of your losses. Because the biggest blowups happen when you full port and you're like, oh no, I'm right. No, this is of course going to work out. And then of course it doesn't. And you didn't accept the loss when you were like down 10%, 20%, until it's too late. And so needing to be right destroys you. Now let's pivot to the second part. Why the market doesn't owe you anything. Listen, the market, meme coins, perps, stocks, bonds, whatever you want to say, they don't know you exist, right? It's just algorithms. They don't give an F about you. All right. They don't owe you anything, right? You could sit on this computer for 2 days straight and there could be no good coin that you like. Guess what? I'll just speak about the meme coin market, even though it's not really a market, right? It's just in those senses. But like, let's say the trenches, right? They don't owe you anything. There could be 2 months of dead, barely any coins. Guess what? You're not paying a group called the trenches for a subscription for one runner a day, please. Give me one runner a day, please. That goes to 50 million cabal or whatever BS you want to say. That doesn't exist. And so just because you're on your computer doesn't mean you need to click some buttons. All right. So the market doesn't owe you anything. And so that's what you need to realize. Just because you were a good boy and you sat at this computer for 15 hours today doesn't mean you should have bought anything. How many streams have I done? I think like 4 or 5 where I sat on the computer for 2, 3, 4 hours in front of all of you and I didn't click a single buy button because there was no good coins. The sooner you realize if there's no good coins, what am I going to buy, the better you'll be. It's kind of common sense. If there's nothing good, if you're clicking buttons to buy, coins to buy, you deserve to be poor and lose all your money. You deserve that because you're doing it to yourself. If there's no good coins, what are you buying? Thirdly, thinking in probabilities. You don't know what happens next. Thinking in probabilities, you don't know what happens next. Every single trade is different. There could be an AI coin and the dev is really good and you buy and it goes up 10x. Guess what? There could be another AI coin that's just as good. You buy, but the dev is a scumbag and he dev sells and he nukes the entire coin. Guess what? Trading's probabilities. You don't know what's going to happen next. Like Housecoin. Did you know Ansem was going to say, hey, buy Housecoin? No. Except like 3 or 4 guys that, of course, were probably running the Housecoin itself, the team. They knew, but no one else knew, right? So you couldn't predict that. You don't know what's going to happen next. And that's why you need to think in probabilities. You need to think when you're in trades, hey, what are the odds of us breaking down through my entry zone? What are the odds of me getting to this entry, this exit, this profit, this loss? What will I do when I get here? What will I do if it goes lower? Because I'm seeing in the Discord, a lot of charts are being sent. A lot of people are buying coins and they don't know where to exit or like, what are they doing? I'm like, well, you should have thought of that before you've done it. There's no reason you're entering a coin and don't know when you want to exit. Or there's no reason you're entering a coin and don't know where to put your stop. You have to figure out those before you enter. If you don't know where you're going to exit and where you're going to take your stop loss, then you can't buy in. I mean, you don't know what's going to happen. You need to have those 2 definite limits set. So in case either side of price action happens wildly, you're safe. You know, hey, I'm going to this trade. I'm only risking 25% or 30% and my gain's going to be 80%. You need those things defined because it'll lower your stress level. It'll lower your panicking. Because when you put in a trade and you don't have those limits hard set already, you're going to be like all over the place. Like, oh, it's going down a little bit. Oh. And so that's limiting you because you're not giving yourself the parameters that you need. You need the risk parameters. Hey, I'm going to take profit here. I'm going to take my stop loss here, right? Because you don't know what the market's going to do. No one knew. I mean, say in December, no one knew in January 19th or whatever day it was, January 20th or whatever it was, that Trump was going to launch a meme coin on Friday night at like 8 p.m. or 9 p.m. Eastern time, right? New York. No one knew that a month ago in December. Maybe some people did, okay, like some insiders or something. Okay, sure. But like the general populace of meme coins didn't know that was happening because guess what? 1, the market doesn't owe you anything. And 2, you don't know what's going to happen next. Like you genuinely don't know. So that's why you just need to be in the present and identify. Trading is a probability game. It's zero sum. And what do I mean by zero sum? It means, first off, that if you want a coin to go higher, that means more people need to buy. If a coin starts to go lower and lower and it just keeps going straight lower, that means a lot of people are selling, none are buying. Okay. Secondly, zero sum. It means that the coin is essentially a closed environment. So for you to make money, someone or a group of people, their sum of losses needs to equal what you made, right? So if you make $500, there needs to be a sum of $500 of trading investments from people in losses to give you your 500 because the money doesn't come out of nowhere. The money doesn't just poof out. So that's what you need to realize. Think of it in that way. Hey, does this coin have money invested that I can extract and I can take? Because if it's a 10K shitter, right? 10K market cap shitter, it doesn't have a lot of money invested. So you're betting a lot that you're going to be one of the first individuals. And most often than not, you're not right. And then you get extracted by the dev or the bundles and they full sell on you. Okay. And that's why new pairs isn't good or it isn't as good as people like to make it out to be. Like the influencers show you because of course they're going to show you. I mean, they have infinite copy traders and all this stuff. And half of them, by the way, dev their own coins. If you didn't know that, what? You think they're nice? They make their own coin, FYI. They make a coin. They buy on 2 or 3 side wallets that you don't know about. They pump it to 20K. They dev sell. It pumps a little higher. Then they buy on their copy traded wallet for like 1 or 2 SOL. Then all their side wallets nuke it for a lot of profit. And then their copy traded wallet either sells for a really little loss or even profit. And then they made so much money and then do that 5 times a day. Exactly. So don't get caught up in that new pairs BS because that's exactly what's going on. All right. That entire side of meme coins is just poor and broke influencers farming. So once again, think in probabilities. The market doesn't owe you anything. As you can see, some days we get a runner, some days we get 6 runners, some days we get 0 runners. For example, that one day that was crazy a while back, a couple of days ago, was it? Crazy. So much volume, right? I think it was the first day of launch coin, like the recent day where the Pasternak launch lab or launch coin went to like 350 million or 250 million, whatever it did, right? That was a lot of volume. There was a lot of runners. right? So when you saw that, you could have predicted, hey, the market probably will give me a lot of runners today. But on any normal day, you can't predict. Maybe there'll be a runner that comes out. Maybe there won't be. Maybe there will be. Maybe there won't be. And that's why you just need to be on the computer. But secondly, and thirdly, like I've mentioned in this video, think in probabilities. All right. You're not going to hit every trade. It's impossible. I don't care who you are. You're not going to hit every trade. Get out of this fixation and obsessiveness about being right all the time. You are not going to be right all the time. The sooner you accept you're going to be wrong and you're going to be a bad boy and you're going to be wrong, right? Like your mom would say when you were a little kid, oh, you're a bad boy. You failed the test. Well, in trading, who cares? You're going to fail, quote unquote, and lose money on a lot of coins. A lot of them. It's how your risk management will determine how you do. And I got a couple questions. Some people said I contradicted myself in day 10 and 15 or something when I was talking about risk. Well, the difference is between conviction and just a random gamble. Because in one of the videos, I said, if you're at a 20-25% loss, you should cut it. In the other video, I said, if you're at a 20-25% loss, you should hold it. Yes, I was referencing conviction. So if it's a random gamble, you don't know what you're doing and you're down 25%, take the loss. But if there's a narrative and a conviction you have and you truthfully believe it pumps and it goes crazy, then hold a 25% loss. That's the difference. I don't think people caught on and they were just yelling at me for contradicting myself. So there's your explanation. But yeah, thinking probabilities. For example, that's how I always preach strategies. 70% win rate, 80% win rate, 20% win rate, whatever win rate it is, that's your probabilities of the trade being right, okay? And that's why I preach journaling. So if you, for example, do the support and resistance strategy, which is the easiest and the best in my opinion, and you take 100 trades and you journal all 100 and you see, hey, I made this much on this many, I lost on this much, this many. Then you have your probabilities. So guess what? Next time you take a support and resistance trade, you know, looking at your journal, hey, personally, I have a 73% win rate, meaning 3 out of every 4 trades, roughly, I will be profitable. And that's all you need to know. You won't do this, which a lot of rookie traders do and what I used to do. Hey, this trade needs to be profitable. This trade right now I take needs to be a profitable trade. No, because we've done the math, we've done the journaling. 3 out of 4 trades that I take using the strategy and using my requirements will make profit. I don't know if this trade is going to be profitable, but I don't care because I know my strategy and I know 3 out of 4 trades will be profitable and I'm willing to take that risk because I know I don't need to be right every time to make money. I know I don't need to be obsessed with being right to make money. I know I can't predict what the market's going to do, right? I don't know what the market's going to do next. And the more you get into that mindset of, hey, I know my strategy yields me a 3 to 4 win rate. Right? 3 out of 4 trades, I'll win. Or 2 out of 4 trades, I'll win. Or 4 out of 5 trades, I'll win. Or 1 out of 3 trades, I'll win, but I hold for a lot of profit. Whatever it is, the sooner you accept that, hey, losses are a part of the game, and the sooner you accept that, hey, I clicked buy right now, that doesn't mean I'll make money. It just means I'm playing my strategy. And over time, over 1,000 trades, over 100 trades, over 5 million trades, I will make money profitably. Because far too many people get fixated on this trade needs to be profitable. This trade needs to be profitable. No. This set of 100 trades needs to be profitable. This set of 50 trades needs to be profitable. Start thinking bigger sample sizes. This set of 100 trades is profitable. This set of 50 trades is profitable. Not this set of, 3 trades needs to be profitable. Otherwise, because I'm full porting and otherwise I'll lose the account. Well, dummy, don't full port. Lower your size. And that's why I always say journal. Figure out your win rate. Figure out your strategy. So then you're confident going into trades, knowing that your strategy works and that say you have an 80% win rate. So you buy 5 coins, say support and resistance at support, you'll know theoretically, according to the journal, after 100 trades of these, 4 out of these 5 will be profitable and successful. 1 will most likely fail. And going into that, you'll know I'm expecting a loss. And if you lose more than 1, guess what? I know in 100 trades, I'm profitable. And that's all that matters. And so guys and girls, I hope you enjoyed this video. Hope you took it away that you can't predict the market. You don't know what's going to happen next. And you have to get less obsessed with being right and more obsessed with being profitable. If you need Axiom, sign up using the link in the bio in the comment section. It's the cheapest and best trading platform for meme coins. It has perps as well. And also the link is a VIP discount link, so it's the biggest discount off your trading fees. Once again, love each and every one of you. Thank you for supporting. Hopefully this video was insightful in one way, shape, or form. Till we talk again. Bye-bye.